Some people pay tens of thousands of dollars a year on financial planning and investment advice, and others literally pay zero. So which one is better? Well, in my opinion, no one needs a financial advisor. Yes, you heard that right. You don't need a financial advisor as long as you have 3 things in place and you can execute on them. The first one is knowledge. You have to be interested enough and willing enough to gain knowledge about investing, best practices for cash flow management, strategies to minimize taxes, and the best ways to create a legacy. And acquiring knowledge takes time. Number 2, you obviously have to be willing to invest some time in your finances. Technology has made managing finances much easier, but there is no such thing as autopilot financial planning. You must be willing to sacrifice some time that you'd rather be doing other things to learn about personal finance, execute your strategies, and monitor your financial life for opportunities and threats. Life is constantly changing, and so is your financial plan. The plan at 30 is going to look much different than the one at 40, 50, and 60. Whether you invest the time to watch educational videos, read books, or attend seminars, you must be willing to gain some knowledge. There are many strategies out there to grow and preserve your wealth, but which ones are best for you and your situation? You must invest the time to learn what's best for you and your family. Lastly, you must have the temperament. Fear and greed are powerful emotions and can cloud your judgment and create anxiety in times of market and personal stress. Significant financial decisions should never be made when your emotions are heightened. Locking in significant losses by panic selling during COVID or the financial crisis or the tech wreck, it set people back years and even decades. Similarly, foregoing balanced investing to go all-in tech stocks in 2021, like Meta, Shopify, Amazon, PayPal, and many others, might take a decade to recover from. Look, it sucks. I've seen people make catastrophic decisions being too greedy or too fearful. In order to be a successful investor and make sound decisions, you have to have a level head and keep an even keel. So, as a financial advisor, why would I say that no one needs an advisor? That seems odd. Well, I studied finance and economics in college. I worked for a large Wall Street investment bank for a decade. I completed the Certified Financial Planner designation, and I have interacted with enough investors over the years to learn a few things. And having an advisor is not for everyone. If you have these 3 things, in my opinion, you can successfully manage your own finances without a coach, a guide, or an advisor. And you should. The problem is some people don't have all 3, especially people who run small businesses. Some people are prone to making emotional mistakes as an investor. You may know a friend who says whenever they invest money in something, it immediately goes down in value. And whenever they sell it, it starts going back up. They tell you to do the opposite of what they do. I have some clients who say that. They realize investing is emotionally tough. That's why they hired me, to keep them from making emotional decisions. They love having a qualified advisor to bounce ideas off of and help them manage their emotions. Some people have complicated situations because of a life event like the death of a spouse, or a child with special needs, or a blended family, and they want more specialized advice. Some people prefer to outsource a lot of things in their lives so they can focus on what they enjoy and what they do best. They often don't want to carry the load all by themselves, wondering if they're doing things right and what they may be missing or not understanding. For these people, having an advisor can provide peace of mind and allow them to live their best life because they would be too stressed doing everything themselves. For some people, especially if you've been DIY for your whole life and are getting close to retirement, there's the risk if you are, quote, hit by a bus. You have to start thinking about what's going to happen to my spouse or my family. Does my spouse have the knowledge, the time, and the temperament to handle everything? I want an advisor who can take my place, keep things moving along, so it's worth building a relationship right now. For some people, that makes sense. And for others, when the stakes become too high and you're worried about making a huge mistake, Having a coach or a guide who's been through this before with other clients can be a huge weight lifted off your shoulders. Now, in a moment, I'm going to reveal the people who shouldn't be paying for a financial advisor. But first, this is as good a spot as any to point out important disclosures. The information in this video is for educational purposes. This is not specific financial planning, health insurance, or investment advice. In addition, everyone's tax situation is different. You should discuss your tax situation with a qualified tax advisor before implementing any planning strategy. The people who really don't need an advisor are the people who've put in the work, who pay enough attention to their investments and just feel comfortable doing it themselves. Some people just find pure enjoyment out of the learning process and are better off without an advisor. Then the majority of people under 30 who are single and just getting started with their career and are simply looking to save and invest probably don't need an advisor, especially if it's something you like to do. You don't need an advisor if your financial situation is super simple. You already know the low-cost, efficient ways to build a portfolio and could get your IRA, Roth IRA, and 401k set up on autopilot. Many people reach out to a financial advisor thinking they need help with their investment management and asset allocation, but that's not really where advisors like myself add a ton of value. While creating, monitoring, and rebalancing an investment portfolio is part of it, the financial planning is often far more meaningful for the vast majority of the population. I'm talking about tax planning for now and in the future to keep as much of what you make as possible. Are Roth conversions appropriate for your situation? Should you take a loan from a 401k? How best should you use insurance to protect your family or grow a tax-free legacy? What strategies should you use to optimize the best ways to actually withdraw your assets in retirement? Should you use Roth assets or traditional 401k assets first? Or non-retirement assets? Or some combination? It's all this other stuff too. This stuff is really important and where I think an experienced advisor can add a lot of value. I think an experienced advisor who has guided people through this maze and put together the puzzle can add a lot of value. Now, there's a number of newer advisors who've come on board in the last few years. They haven't been through some of those financial crises of the past 20 years. They haven't been hardened by that stuff. They haven't seen what's gone wrong. Sometimes it's better to work with somebody who's been through it and has led clients through it. Sometimes when showing financial plans, we can show how to potentially save hundreds of thousands of dollars in taxes and interest over time. Is that worth the annual cost of an advisor? Many times the answer is yes, but not always. In my opinion, if you enjoy it, you're willing to put in the time and effort to learn, and you can manage your emotions, then you shouldn't pay the money for a personal financial advisor. And for many people, that's the case. But for many others, especially business owners, it isn't. If you don't have the interest, don't have the time, or know that you get anxiety when making financial decisions, having a financial guide can really supercharge your financial life. And if you're looking to see what types of strategies I help clients with on a day-to-day basis to optimize their wealth plan, start with this playlist, How to Create a 100% Tax-Free Retirement Income. It's a 9-part series that is truly eye-opening.